Hi, this is Zak Mir with the Bulletin Board Heroes on Thursday, the 12th of July, here on Share Talk Radio. Starting off with AFC Energy, where we've got the stock breaking the cage here, the falling wedge from the end of November last year. Decent close on offer, hopefully, by the end of the day. What you want to see really is an end of day close above the 200-day moving average at 11.89 pence to open up the possibility of a full rebound back to like last October's resistance at 18 pence plus. This stage only back below the 50-day moving average, 9.46 pence, would spell danger for the bulls. On to Aminex, which is being talked about quite a lot at the moment. What's interesting here is the way you can see that every time in the recent past the shares have spiked up, somebody aggressively comes in and goes short. We had obviously this over the last 24 hours, same in June, same in April, March, February. So they're knocking that ball back down again. What we're looking for here, really, I suppose now, given the history of the stock, is a proper weekly close above the 200-day moving average, way up at 2.98 pence at the moment. That is basically, obviously, a long way away at the moment, but will start to fall down over the next few weeks. And maybe if the stock can break that, then we would be more confident that any rallies are not going to be slapped down. Obviously, not going below 2 pence in the near term as well would be helpful to the cause. Now onto a stock which I haven't covered before on Bulletin Board Heroes, but here we go with Earthport, and here it looks as though the shares broke this wedge quite a while ago now, 2-3 weeks ago, breaking above the 50-day moving average and sort of gradually coming out of there. Reminds me a bit of the way UKOG, or that's not UKOG, Greatland Gold actually turned around, so maybe it'll emulate that. What we need to do in the sort of the initially here is to have an end of day close above 11 pence. Ideally, a break above the 200-day moving average at 12.65 pence would be useful for the bullish cause. But if you are an aggressive trader, you would have decided that the stock was already back in recovery mode when it broke above that November resistance line and the 50-day moving average. Speaking of Greatland Gold, here it is. I thought it might be worth updating the situation here. In the end, we failed, I suppose, where we were likely to fail between 2 and 2.5 pence, which is where the stock peaked out between October and January. Current situation taking up the slack. Interesting that we're holding above the bottom of this gap at 1.2 pence, and while we're above that, one would expect and hope for a retracement back towards 2 to 2.5 pence. You can see that the 50-day and 200-day moving averages are both rising at the moment. You can also see that breakout there in May is similar to what we saw in on the Earthport chart just a few seconds ago. So maybe history will repeat itself with Earthport. On to another stock which I don't cover very often, but is looking interesting at the moment. Comes in the form of New Oil and Gas, where it looks as though this stock has broken a wedge at 0.8, and really while we're above that, looking for a retest of the main 1.2 resistance area. If you're cautious on the stock, maybe wait for either a break above the 50-day or 200-day moving averages at 0.95 and 1 pence respectively. But for the aggressive and fun-loving technical analysts, the breakout here has already happened. Only back below 0.8 would really question or delay the upside scenario. Next up, a stock which I thought I didn't actually look at the chart. I haven't looked at the chart at all until this morning because I thought that the company was in bear mode and not really doing well at all. But in fact, it's quite the opposite. We've had a wonderful source of recovery here. We had the break above the we had the gap through the 50-day moving average twice, in fact, in March and May. It's the second time lucky for the shares. Also had a sideways shuffle and a gap higher through the 30 pence level, which has been the recent trigger. So 17 pence too late here. What will be interesting though now is that if we can close above that 44.5 pence July peak from last year, above that, the minimum target here is towards 60 to 65 pence at the top of a broadening 2017 triangle. On to one of the favourites at the moment, Tern PLC, which last time we left it, I was saying that we're looking for an end of day close above the 50-day moving average. Hopefully we'll get that today. If you're cautious on the shares, maybe you'd want to see end of day close above 30 pence before opening up a retest of the best levels, and a pie in the sky target, best case scenario at the moment, up to 80 pence, which would be an April resistance line projection, but I think most people above 30 pence would settle for 40 pence over the following few days. On to another favourite, UK oil and gas. It was worth keeping an eye on what's going on here. V-shaped football flag here, so a bit disappointing that it hasn't made a bit more progress than it has with the rising 50-day average here. Still looking for the 200-day line at 2.87 pence while we hold above the 2 pence zone. Finishing off with a totally new stock to the Bulletin Board Heroes, comes in the form of Wey Education, where we've had a classic, well, it appears to be a classic falling wedge break today via a gap to the upside as well, so that's all good. So as long as we hold around here, 15 pence plus, one would be looking for quite a sharp move back towards 25 pence and former May resistance. So we'll see how that pans out over the next few days. That's it from me. More updates at the same time tomorrow.